into the final hour. This is Chris Pulver here. Let's get started. It is 3 p.m. on October 8th. A bit of a silent melt up today. We had a slight gap higher on the SPY. We had a big pullback in China. We had oil pullback as well, gold pullback, but the U.S. markets keep humming along. We should be pushing up around 1% or so. I had a close on the SPY yesterday around 567.84. We're up to 572 today. That's almost a $5 move. Let's actually see if that's up above a percent. It's going to be close. SPY's up 0.86, Q's up 1.34, Dow's up 0.3, Russell up 0.23, VIX pulled back a little bit. VIX futures down as well. Dollar index pausing for the last 2 days. Nothing to see here. Oil, pretty decent pullback. Again, big candles on oil from high to low. We're looking at about a 7.2% move from high to low. Big nasty pullback on oil. We came right up to test this 200 EMA. This continues to act as some type of dynamic level that the market is, trying to get above for a bit of a buy zone. We can see that as of the last year or so, we have made lower highs. So we are sitting at equal lows. We are sitting at lower highs. If we're going to have a bull market on oil, we really have to make a firm break above $80. Otherwise, this is probably something that's getting faded, and we're going to continue to threaten the downside here around 68 to 67.50. I have cleared up all of my oil positions. I was in CL for oil futures. I'm done. I did some option trades around the $65 mark, the 65.50 area, and I've gotten rid of those trades. I don't want to be on the hook for any type of futures exposure if we have more volatility ahead. Obviously, if price goes up, that'd be fine. But before we had this little pop to the upside, Saudi Arabia came out and said that they were looking to push prices lower. They're getting rid of the high dollar prices like $100 a barrel and setting their sights more on increasing market share, which could potentially push oil down and break this major support. There's not really much to stop it. If we break these lows around $65, the next real liquidity zone and demand zone is going to be sub 60. So I think we could get there very fast if we had a high to low measure move in any way, shape, or form from high to low, lower high to lower low. I'd be looking at this big chunk around probably $50 to $40 before I'd comfortably say like here could be a low in oil. So I don't want to be exposed to that support unless I'm using defined risk. And so I went ahead and took some profit on those defined risk trades. I had mentioned in my Telegram post that I wanted to price in a couple things today before we get to the close. I'm also jumping into a webinar at 4 p.m. Eastern time. If anybody would like to join me, I'm doing a webinar on my daily profit play, which has been a nice little daily income play we've been using for the SPX. And it's been a lot of fun. We've had quite a few winners. We're 45 of 50 since inception of the service. And traders are doing really well, as am I. It's been a nice little cash grab for all these typical mornings in the market that we love to see. So I'll share all that stuff before we go. I do want to price in a couple of earnings plays, Domino's Pizza, maybe look at Delta Airlines, and then take a look at Friday where we have some financials. Now, it may not be something I want to trade necessarily like a JP Morgan or a Wells Fargo or a BlackRock, but I do want to see what the option prices look like, because if we see prices this week especially that aren't blowing out expectations, this might push me into thinking that earnings season for this year, this quarter, I guess, might be better to be a seller, at least in the next maybe 20 or 30 days as we come into the election. If the markets are a little bit tight, if we're not getting big blowout moves, or the market's not necessarily punishing bad reports, then we'll find out. Okay. So it says stocks are flat. U.S. yields edge up on Fed expectations. I do want to take a look at that and take a look at the CME watch tool for the Fed. We are talking about Mag 7 seems to be doing okay today. Apple is up. We'll take a look at the heat map as well. Apple's up 1.65%. Amazon is up 0.8%. Google up fractionally. Meta's up 0.84%. Microsoft over 1%. Netflix, nice little comeback today, up 2.8%. Nvidia up to 132. You son of a gun. I was a week on an Nvidia play, but that's all right. I ended up taking, it was like an $8.50 debit. I closed it out for $5.50, took a small loss. I needed price to get back to 130. It did that this week, so I was a week off. Pretty sure that Nvidia play that I had, if I go to the charts here, Nvidia, let's go to past trades. I think my expiration was out to the 11th because I traded it the same as the SPY as well as the QQQ. Let me double check something really quickly. History on NVIDIA. It was an October 8th. No, that's not right. Let's go to NVDA. November 15th, NVIDIA. That was a hedge. October 4th. Okay, so that expiration was not good enough to get through this week. So that was last Friday. I ended up taking a small loss, which was fine. It was manageable. But I needed NVIDIA to get up to, I've got a yellow box in my chart, and it finally got there. So I needed an extra week on the trade. That would have been a nice little profit. My center price was around 116, 117. It's up $15, and I paid $8, but it doesn't matter because it was a loss. Just a little bit of timing on the options trade would have been helpful. That's unfortunate, but NVIDIA making a run to the upside. Let's have a look at the heat map here and see where things are going in the U.S. market. I had mentioned that China has hit a bit of a dip today, so we take a look at China stocks. The Hang Seng Index is down 9.4%. Alibaba down 7.55%. Baidu is down 7.87%. FXI with a pullback in double digits, 11.45%. KWeb down double digits, 10.77%. MCHI, which is basically it's an all-world China, all-world plus China ETF, down 12.69%, and JD down 8.41%. So some pretty violent pullbacks with some gaps lower. Headlines today read that the market was expecting at some type of either conference or summit for China to basically come out and say there's more stimulus coming, and there wasn't. So the market is tanking a bit today. Now, to be fair, I do think that a pullback was necessary. I just want to make sure that as I watch these China stocks here for the next maybe 20 to 30 days, that we're not just going straight down and starting right where we started to break out. So hopefully we will see just some simple Fibonacci behavior. Here's a low, here's a high. We pull back to around 30%. If we can stabilize in here, I'm going to look to see if we will get back and retest highs. So if Baidu gets back to 116 or so, that's a good sign. If we stabilize anywhere between now and let's say $100, that's a nice little area to look for some support. If we're going to see Baidu bounce at all, same thing on Alibaba. Alibaba's pulled back less than 23% based on this recent low to high. Same thing here. If we get back to, let's say, 105 into, let's go 105 to 95 on Alibaba for some potential stabilization and bouncing to see if we can retest the highs there as well. I said this week I'm looking for bull flags on some of these China plays to see if there's continuation. What I don't want to see is a massive decline all this week. So if we take a look at the weekly chart for a moment, if we go weekly candle, and we are up aggressively for 1, 2, 3. This is a huge week, right? So there's our huge weekly candle. And if this week's candle is just a massive, massive red candle, that's not as good. But if it's a fraction where we take this low, this high, we pull back to a typical fib level, somewhat shallow, then I'll look to see if we stabilize and look to see if we can resume to the upside. So I might actually look at buying some shares and try to time this where I can actually buy the shares and get to the highs and put a stop loss in. But otherwise, I'll just sit with some of my options positions, which are all way lower. So there's good income and good timing as long as you don't make fresh lows, which would be we're coming all the way back. So I don't think that's the case. I think we're going to stabilize in here. So I'll be watching FXI. Big rejection on FXI. I do have the stock covered at 29, and so far, it could still get called away. I think my covered call is out to the end of this month. Let me confirm that right here. FXI. Let's go into trade. FXI. Where are you? Get rid of that. FXI. Here it is. We are covered at 29. Yep. So I'm covered at 29. So we'll keep an eye on that one. KWeb. Another pretty violent pullback. My 23 by 35 diagonal spread is still looking okay. Hopefully this will, just give us a decent pullback. JD, honestly, the more shallow of the bunch. I still like JD overall, but just looking for some decent fib behavior. See if we stabilize at that 38 to 50% zone. So that's the China situation. U.S. markets for today, we're seeing a nice little melt up. So it's been slow and steady. Took some SPX trades this morning and ended up grabbing some quick profit this morning. Had a small win on trade number 2 and then a break even on trade number 3. So it was a winner and a small winner and a break even on the day. Actually, by the time price did roll out to this little correction around 1 p.m., All 3 trades hit the actual profit target. I just didn't wait that long, so I was actively managing the trades through the morning, and I was happy with win, small win, break even, just to not worry about it. And we've ended up melting up a little bit higher all day. The gamma levels are lighting up here to the upside. I am seeing this 575 one get bigger as the day goes on, uh, but because we've already made a move from 570 all the way up to 572, I'm not going to buy the call at 575. I'm not going to because, well, we have CPI news on Thursday, we have PPI news on Friday, and I'd like to see if there's something that just kind of stands out with coming into the market on Thursday or Friday. Where are some levels that I could see the market trading to, and maybe give me some visual roadmap and a short-term directional play. But today was pretty even when we came into the markets this morning. I was looking at pretty evenly distributed bear side and bull side, and as the day wore on, the bulls just took the upper hand. The bears are pretty absent and quiet, and it's just been a slow 0.9% melt up on the day. But we are not at all-time highs. We are not close to all-time. Well, I suppose we're close to all-time highs, but we are still stuck within the last week's range. So we had our end of month, end of quarter range within 2 days there. We have the previous all-time high that has failed several times. So if we go resistance, 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 we're right back up towards these recent highs from last week on Friday. Okay, now we may drift a little bit higher than that. We do have these all-time highs sitting right there. I'm not saying that I want to do a bear call spread or get bearish on the market, because obviously every time we've broken and gone higher, this market finds a way to justify making higher highs and carving out higher highs. But is this in anticipation of a lower CPI print for Thursday and the market's already getting ahead of itself? Is this a buy the rumor, sell the news when the market's like, okay, good, inflation's down again, and the market's happy for a moment, but it's priced in, and then that market gets faded? We still have a lot to digest. I keep saying this. I'm just not getting super aggressive right now. Okay, on my higher time frames, I'm trying to be extremely patient right now. On the weekly time frame, you can see that the red candles are few and far between. Even for the last 1, 2, 3, 4, 5 weeks of trading, outside of that Labor Day sell-off, this market has been just trying and carving and working. Now, let me bring up one more workspace here. I do have a workspace that has an RSI level as well as a momentum oscillator, and I want to see if we have some overbought conditions on the SPY, the DIA. Let's take a look at this for a second. So I know I have one called like harmonics and pivots, and let me just bring up this workspace here. This one gets a little bit messy, which is why I don't reference it a lot, just because this has been like years of analysis, and I can see through all the minutia on the chart, but maybe you can't. So I'm trying to keep it pretty simple. My SPX trade is sitting here with the daily time frame, not quite overbought. This bottom indicator should be my average trading range. So average trading range for this is the 14 period on the day, and then my RSI. So the last time that we were overbought with divergence would have been right in here. Some nice divergence, and that was right around our July to August turning point. And we're back up to testing highs, breaking highs. We're not overbought right now. So, I mean, realistically, not having an overbought market on the RSI, this is a 21 period RSI. We're not overbought. Now to the 14 period, maybe we are. Let me go ahead and check this on a 14 period. So if I go 14 period RSI, we're not overbought. So neither one of those register overbought conditions. However, if we start to make slightly higher highs, but it is giving us lower highs in momentum and possibly even lower highs in relative strength, that could be some hidden bearish divergence to drive this market a little bit lower, at least pulling back into some correction zones. Now, let me take a look at the higher time frames. So the daily chart, not overbought. Okay, the weekly chart. The weekly chart. Take a look at this. The weekly time frame. We are seeing some overbought conditions with divergence, which means our price is going up, momentum is disagreeing, and we have some slight bearish divergence on the weekly chart. So, does that mean that a top is going to form? Not necessarily, nothing guaranteed, but it does mean that I'd be on the lookout for something to provide a correction. Okay, now we don't know how big, we don't know how violent, we don't know how many points to the downside. But man, if I look at this chart and I saw this on any instrument, there's a high, there's a high, there's a high. and we are showing disagreement in momentum and disagreement with relative strength, that is bearish divergence. So the only thing that I'm missing is price to support the confirmation that we can correct. So we don't have that yet. Okay. So I'm going to put a pin in this for a second. We'll go to other indexes. I'll go to the monthly time frame. Monthly time frame. The monthly chart, man, this is wild. It is so rare to get a monthly overbought or oversold condition. But if we take a look at this, and the hard part is it's going to take another month or 2 or 3 in order to give us the actual indicator to print that I want to see, or to give us the data points and the candlesticks to see that, okay, here is bearish divergence or hidden bearish divergence on the monthly time frame. But on the weekly chart, this is certainly something I want to pay attention to. But like I said, what we're lacking is confirmation that price is going down. Okay. So SPX, a little bit overbought with divergence on the weekly time frame. The NASDAQ is not at recent highs, but you can see here, even if we were to come up and make fresh highs on the NASDAQ or try to retest the highs on the NASDAQ, you notice how divergence is occurring once again. I'm telling you, these markets for the US markets right now are priced to perfection. And I think that the best catalyst right now for us to go higher would be a pullback. If we get a pullback, we can entice the buyers to step back in. If we just stay at these highs and stay at these highs and stay at these highs, one sour economic report or one wave of bad earnings that the market doesn't like, this market can correct on itself very, very quickly. So the weekly chart for the Qs, I'm seeing some overbought conditions with lots of divergence here on the relative strength and the momentum oscillator. If we go to the Dow, the DIA, this one actually is printing higher highs in price, and we are seeing lower highs in momentum and lower highs with overbought conditions. That is, again, hidden bearish divergence. Now, let's take this into something that I think is a little bit more actionable. Here is the chart to watch. If I go to a daily time frame on the SPY, can everybody see? I'm just going to move this box over here. Okay, get out of there. Can everybody see this box right now? Right now, I'm just going to say that this is our choppy area that we're watching to see what it does. Now, I could extend this all the way down to this FOMC level. And the reason why is I've said this for the last couple weeks since we had that bottom on Wednesday during FOMC. If the market turns, breaks this low, and heads down to FOMC lows, if we break that FOMC low, there's room to keep correcting. Okay. Now, are we going to correct below the Labor Day sell-off? Are we going to correct all the way down to the August 5th bottom? I don't know. The one thing that would be a concern would be if we came all the way back down to test this September or Labor Day low, post-Labor Day low. Is that going to be some type of head and shoulders pattern? It could look a little toppy in the markets, which obviously is not a good thing, right? Could we come back down and have a correction that gets us back to this level? Is this a chance to buy the dip and see more range trading? Are we going to go into a range instead of having higher highs and always forever going up? Are we going to have a range where we can have about a 10% area where the market is going to go from lows to highs? Well, that to me is a trader's market as opposed to a passive investing dollar cost averaging. This market's going to go higher forever. Maybe there's a period of 3 months, 6 months, 12 months where we don't make all-time highs again. But you and I both know this market is almost so accustomed to that it's almost weird, and it feels wrong if we're not making all-time highs in the US markets. It's crazy. So anyway, I'm going to box this in on the SPY and just watch this price action here. On the Qs, it's a little bit more violent because we didn't quite hit the all-time highs, but I would say that the NASDAQ, if I box this in here, let's go to this recent high that we saw back on the 26th of September and go back to these recent lows. So we have come in to fill this gap. I can go ahead and delete this area. We haven't come back to fill this low yet, but I'm just going to watch this for the last couple of weeks since we had FOMC and the FOMC high and then that little breakout to fill that gap. I'm watching to see how price behaves. If we fail at this high, could we head back down and have a range trade on the QQQ? Yes. Could we come up to the all-time highs and have higher divergence that lines up on all the major indexes, S&P and the QQQ and the DIA, lining up for some overbought conditions and divergence? Yeah, that could put in a top. They could put in at least a near-term top to get a pullback. The diamonds, okay, this box has been pretty safe. So I've already had this one boxed in. Other than this little fluke we saw on the 27th, this chart hasn't broken higher or lower. So another one to watch very carefully. If we break below the lows, do we take out the FOMC low? If so, can we correct and pull back? And to those levels, what I'd be watching are just my simple moving averages. Exponential moving average 50 period, 100 period, 200 period. Okay, so can price pull back and cushion in the 50 and 100? Possibly. How about the NASDAQ? Could it cushion it? Possibly. How about the SPY? Could it cushion it? Possibly. So I'm still waiting for a pullback. I don't know how bearish I want to get necessarily outside of if we see an aggressive directional move. What I might end up doing is taking a bear put spread and go after like a $1 spread. I'll say this. Let's say that price turns bearish right here. Okay, and it closes back below these lows around 563 or 564 or something like that. What are these lows? Let's say the SPY closes back below 565. Well, if I buy a 565 put and I sell a 564 put, I do a dollar spread and I can pay, let's say, 40 to 45 cents for that debit. Well, I risk 45 cents, I make 55 cents, or even if it's 50-50, all I look for is in the near term, if price goes down for a week or two, I would look to see if I can just capitalize on a near-term credit. It's going to be a debit spread, right? And so I don't want to go out super far because it's easy for the market to come down and then bounce back up. And the market likes to do that a lot. And I've said this for the last couple of weeks now. I mean, we're still pretty well positioned for any type of pullbacks to slingshot higher, and still try to keep this melt up going. I just don't want to see this market necessarily go to the upside just violently, because the higher and higher it goes, to me, this is going to be something that eventually ends up crashing in a bigger way. Not that we can't be excited and celebrating higher highs, because that's a good thing and everyone's portfolio is going to benefit from it. But eventually we're going to get a nasty, pop of the bubble. Valuations are too high. The market's running too hot, and it's going to correct. And we're going to have these reversions to the mean. And a lot of that might be based on something like the distance away from my 200 period moving average. So I do keep an eye on that. This is why I've been watching gold the last couple of weeks to see if we get overstretched. Okay. All right. Gary, what's happening? How are you today, sir? Francois here. Got out of the daily profit play, break even, included my $20 commission. All right, there you go. Cover that. That's good. Harry says, hey, Chris, when you started out trading options, did you paper trade first? Not really. I just traded really small. When I first started trading options, it would have been like 2011. And it was really just putting in sell puts if I wanted to own stock, kind of Warren Buffett style, and covered calls on stocks that I own to lower my cost basis. That was like the basic stuff, which is about, portfolio management more so than it is income generating. When I started being more active in options, that was 2015, 2016. I just traded really small. Credit spreads, collecting 45, 50 cents on the dollar. Taking, if it was one contract, I'm risking, $50 at a time. So it was really small and just a lot of trades. I'm typically a trader that's probably going to log, I don't know, 1,000 to 2,000 trades a year. And if I can win 50+% of them, then I'll make money. If I carve out an edge where I'm going after higher reward than risk and I could win 50, 60%, I make a lot of money. I have a lot of singles, couple of doubles, a few triples here and there. I don't know what I'm gonna classify as a home run. I think this year, if Bitcoin goes to 100,000 plus, then that's going to be my home run for the year. Just because I'm already positioned for it. I've been dollar cost averaging for the last 6, 8, 9 months, and Bitcoin going to 100K and getting a big run for the rest of the year. That's going to be my home run trade. But the rest this year so far has just been a lot of singles and doubles, and so far so good. Okay, so paper trading wise, if you're looking for a demo account, I know there's a handful of brokers out there that do demo accounts. Just find one. But if you do demo accounts, they might not give you full permission to trade all these options strategies. You might be able to buy a call only, buy a put only, maybe do a spread if you're lucky. Depends on your options permissions, but a lot of time the paper trading accounts, they won't give you full permission. But test it out. If you have a demo account or paper trading account, I know that E-Trade does paper trading. Check with like Fidelity, maybe Schwab does with their Thinkorswim platform. I know Thinkorswim, you can get a demo account there, paper trade like 100 grand. And you should be able to do whatever strategies you want with Thinkorswim platform. Tasty does not offer demo trading. And I think Webull offers paper trading. So I don't know, just check with a broker. But I would just make sure that either one, you're trading sizes that are going to reflect your live account. and 2, you have all the options permissions to then do the type of trades you're looking to do. Because if you're just doing a paper trading account to buy a call and buy a put, I mean, come on, man, that's like basic stuff. If you're demo trading to get familiar with like placing 2 legs and 3 legs and 4 leg strategies, and moving around an options chain and navigating all that stuff, I mean, hopefully a broker that you can find out there will offer that type of paper trading. Okay, hopefully that helps. All right, so here we are at these highs. I'll get rid of these lines. Any charts, any requests, any asset class you want to talk about, let me know. U.S. markets are up today. Volatility is down slightly, down about 6%. Dollar index is pausing for the day. U.S. oil, big retracement. That's another 7+% move. Lots of volatility that I'm trying to get out of. And so I've eliminated all my oil exposure. I don't know what oil wants to do. If I'm going to take a trade on oil, perhaps I would look at another credit spread off the lows to see if it holds. But that might be like playing with fire right now, and I'd rather just stay out of it. I'm happy that I took some profit back here. And even on this recent move, I had 2 trades that I grabbed 50% profit on each one. And so I'm good enough with those trades for now to not worry about the geopolitical risk that's happening here in oil. Gold and silver. Gold is pulling back. It's down about 1% on the day. Silver's pulling back harder today, down about 4% on the day. This is an important spot to watch on silver. I had mentioned it the last couple of weeks, looking at this as a potential breakout and a pullback area. If silver stays kind of postured here, that's a good sign for silver. But this could quickly turn into, if we get a violent close lower, this could quickly turn into a sideways move where we have resistance and resistance, support and support. And I would just look to see if I can start dollar cost averaging back in or establishing new trades around the $26 to $27 handle. I would trade SLV. I would take a look at probably SI for silver futures, and I would possibly add to a PHYS position or a CEF position, which are other ETFs that explore some silver and gold exposure. But, this would be my support level if I'm going to get back into it. Otherwise, if it just stays where it is, I'm just going to hang out and see if price will stabilize here and just kind of chop around. If we get a fresh breakout to the upside, good. To the downside, I'm looking for some pretty strong support around 26, and I'll probably establish a new batch of positions there. Okay. Triple digits on, possibly. Palantir's in the S&P. They're going to get some crazy order flow. We talked about this last week. I think the fair market value on Palantir right now is like in the 50s. So let's go Simply Wall Street, take a look at Snowflake analysis here, PLTR. So right now, fair market value is $51. We're trading at $38.89. I have some exposure. I wouldn't mind seeing a pullback on it if we can get it. We're having another nice day to the upside today. It's up. What are we up today? Palantir's up 6% today. Plus, we have a gap in the 30s. I don't know when this was actually introduced to the S&P, but you can clearly tell the order flows have been pretty aggressive. So this momentum is getting pretty steep. One level I'd be watching for is around this $44 to $45 zone. If that hits and becomes resistance, I would like to see a pullback. I wish I still had all my shares. I was buying Palantir back down here near IPO lows around $15 and lower. And so once I got up to like $25-30, I started closing out my shares and they started trading options. And so it's a lot of naked puts and cash secured puts, credit spreads, things like that are looking pretty good. But I don't have any shares that have been running for the last $10-15 a share. So anyway. Triple digits, sure, give it time. But right now, I'd say that's a bit overvalued. The price to earnings is really, really aggressive. That's way up there. That doesn't mean that it can't get there, but I don't know. I would likely, I don't know. I'd like to see a pullback. That's it. I just don't want to buy all-time highs. And I know we're not there yet, but I don't want to buy stocks that have been ripping with these type of trends as of late. And I just want to see if we get pullbacks. Bitcoin, pretty steady around the 62,000 mark. Keep an eye on this one for, if structure breaks on Bitcoin. If structure breaks on Bitcoin, great. Possibly we'll make that run to 100K. AVQ, is that silver double? Yeah, that's what? Is that a single leverage or is that a leveraged? It's the same thing. It's a pullback zone. If we pull back to $30 on AGQ, I would consider that to be a decent support level. If this is single leverage, like a 1x instrument, I don't mind it. If it's double leverage or triple leverage, I try not to hold the leverage ETFs very long. And so if you time it well enough, okay, fine. But I don't like holding double and triple leverage instruments because their prices are never buy and hold. They're always repriced. Okay. All right. MicroStrategy up again, 3.5%. MicroStrategy is darn near at all-time highs. That's an impressive feat. I don't know what the real catalyst is to get MicroStrategy up to all-time highs, but for the last 4 days, 1, 2, 3, 4 days, we made some pretty good progress here. So lows to highs, I mean, that's up 25% in 4 days. That's ridiculous. Now, I do have a lot of income plays on MicroStrategy. That's fine. I'm looking to add more, but not right now. I added a trade this week on Coinbase. Ethereum still underperforming Bitcoin in a pretty big way. I need to see if Ethereum can get back above 28.14. EETH is the ETF that I'm playing at $60. 6J, the Japanese yen. I'm leaving the yens alone right now. The Nikkei hasn't made any real progress over the last, couple of weeks. We've had sideways movement in the U.S. markets. Even though the S&P is near the highs, the Dow's near the highs, the Qs is getting back there, but the Nikkei has done next to nothing. So if the Nikkei gives us a pullback, perhaps something like this, maybe a pullback in here, I might actually take a position to get long the Nikkei in either this zone or this zone. So pull back to equal levels. Let me clean this up. If we pull back to equal levels or equal levels, looking to get long the Nikkei. Now, that isn't really a play against the currency. That's just an index play because I do think as even the Japanese yen raising rates, it's a stronger economy for them raising rates. The U.S. market went on a rip. Even with the U.S. raising rates, we had all-time highs. And if the Nikkei resembles something to that degree, I'm hoping that the Nikkei can still carve out all-time highs. But I want to see if we get a dip. Okay. All right. FXY. It's an ETF essentially to hold against the Japanese yen. I'm long the FXY out to 2026, just in case we have another risk-off event. The Japanese yen gets stronger. That would be the equivalent of maybe the dollar yen. If this thing goes up to like $70+, that's the dollar yen roughly coming back to like 130 or 125 or 120. So I'm long just a call. It's just a call, and I'm looking to see if there's just a bunch of upside on some type of like Japanese yen unraveling. EWJ, that's trading the Nikkei with a much cheaper ETF. DXJ, that is Japan hedge fund stuff. DAX, somebody asked me yesterday to take a look at the DAX. I didn't get a chance to do that. German DAX is making, attempt to get back to higher highs. I still think it looks postured pretty solid. It's in a pretty nice uptrend. It's intact. So we've had pullbacks below the 200, back above the 200. Same thing here. So, back to the 50 and higher, back to the 50 to 100, back to the 50, 100, 200, and ripping higher. So I would like to see if this gets up to, pullback and we can maintain some higher lows. It's still in an uptrend. So if we have any pullbacks here, 18.5 to 18,000 on the DAX looks pretty good to buy the dip. You can do a pretty tight stop loss in there. So if we make a higher low than the August 5th bottom and we pull back just below the 200 EMA and then bounce back above it, that's a good spot to be looking for a long. So getting long in here on a confirmation above, stop loss below, and then if we break new highs, that's a nice little trend trade. Turn that into 2 to 1 or better. It's good stuff. So I like the DAX to the upside. FTSE probably hasn't gone much of anywhere. Man, this thing is so sideways. I wish I was trading a strangle on the FTSE. I was looking at this a couple weeks ago. I just didn't find the ETF that I wanted to trade with any type of liquidity. The premiums were garbage. So I don't really have a UK 100 that I can trade. I looked at my platform here. So UK 100, no. The FTSE, no. I just need to find an instrument that resembles it. So I think I did just like a basic search for it. I couldn't find it. But if anybody is trading the FTSE, if you can trade options, I think a beautiful option trade right now is you're selling calls, you're selling puts, and you're collecting premium, and just go after really consistent profit targets, 10%, 15%, 20%, and just take profit and redeploy it. This thing has been sideways for several weeks now. I know that we have the U.S. election coming up, but if you can grab like a 20 to 30 day premium, basically you just suck out the time decay, get paid to do that. That's not a bad play. And the same thing is true on the FTSE. We have not made a higher high since May of this year, but it does seem to be pretty well intact outside of some choppiness. Okay, it has, it's kind of like a stair step. So we go up, we go sideways, we go up, we go sideways, we go up, we go sideways. So as long as it maintains this posture here, I would like to see if it stays above this level, stays above this level. Chop suey right now, but if we end up using our trend line support, we could buy it low, stop loss nice and tight, try to get back to the highs again. If we make some fresh highs, I'm guessing we're going to pause again and just keep staying in this kind of this stair step manner. Okay, so that's the FTSE. Hence saying we talked about China stocks are all down today. Mag 7's up today. Currency pairs, we did the DXY. Let me take a quick peek. So Aussie CAD, I'll just get rid of some of my moving averages and take a look at some structure. So Aussie CAD to me is still bullish. I'm looking bullish. So even if we have additional pullbacks here and we go higher, I still think Aussie CAD can get back into the 94 to 95 zone. I like that trade. We had a pullback yesterday on the Swiss crosses, so the Aussie Swiss is pulled back. I'm still plotting a symmetry level right there to that yellow box. And we had a nasty day yesterday, but hanging in there for right now. I'm just going to keep holding and collecting some positive swap. Yen pairs, I'm not interested in at all. Aussie New Zealand, I'm looking to see if the Aussie New Zealand will hit some resistance here around the 111.50 zone if we get back to that same level. So if we hit equal highs, maybe look for a turning point. Otherwise, lots of support down here, lots of resistance here. This is making slightly higher highs and higher lows, slightly. So what I'll be watching on the Aussie New Zealand is if we maintain this type of move, that perhaps we have a bit of a bounce coming. Now, the RBNZ is due to cut rates today, if I'm not mistaken. 9 o'clock tonight, they're looking to cut rates by about 50 basis points. Yep, that is a forecast. So if we see a big drop in the RBNZ cash rate, does that offer up a little bit less of the carry trade in the differential according to the RBA, which RBA is sitting at 4.35? Or do they cut rates to 4.1? Australia cut rates, or actually they're still sitting at 4.35%. So if the RBNZ comes down to 4.75, that might offset some of this positive differential. And I don't know, I could see the Aussie New Zealand going a little bit more to the upside. We are making higher highs and higher lows, like I said. So something to keep an eye on. Aussie dollar, big resistance trade. Dollar's been getting stronger for now, but if this turns back, maybe a swing trade, stop above, swing back below, halfway point or lower. I don't know if the dollar's going to do that. If China continues to drop lower, if China stocks drop lower, the Aussie is probably going to go with it. Wouldn't be a surprise. So keep an eye on those China plays and that correlation with Aussie. If China goes down, Aussie's going with it. Okay. Other pairs, CAD Swiss. CAD Swiss still sideways. CAD Yen not interested. Swiss Yen not that interested, but I'm holding a short position. Euro Aussie had a nice pop off that support level. I missed that trade right there. That was a really strong level right around that 60.50 handle. Euro CAD, I'm looking to see if the Euro CAD will go lower. We're just dealing with some chop right now. Euro Swiss also sideways. I'm still trying to measure a move back up towards 1.00. Euro Pound, I missed my trade around 8,300. We had lows right there around 8,300. It still hasn't broken any recent highs, though. That's the one thing that's been a little weird is I still have a chart alarm set at 8,300. If we hit 8,300 on the Euro Pound, I'm going to buy this thing. So perhaps we're just setting up, coiling off these lows that we can get a nice pop to the upside on Euro Pound going north. So that's still going to be one that I'd like to see develop. Euro Yen, not interested. Euro New Zealand, not that interested. The support level was not quite as low. I was looking to get this back to like 74.50. We didn't come there, so I missed the trade. Euro dollar turned hard on that dollar index, and I've got no trade on the euro dollar right now. Pound Aussie, I took a sell trade. That was fine. That's it for right now. No trade that I see. Pound CAD, I'm looking for a downturn. The only thing I don't love about the pound CAD is we haven't broken any lows. This low, this trend line, for example, we haven't really broken that trend line. So if this is just choppy, if it gets on the right-hand side of the trend line, I'd like that trade better for a chance to short it. Again, that's going to depend on some oil prices. Pound Swiss still holding long for right now, trying to get back towards 120. Pound Yen, no trade. Pound New Zealand, good structure on the Pound New Zealand for some intermediate ranges, 2.1 support and maybe this like 2.15 resistance. Pound dollar, big turn on the pound dollar for now, but I don't know, not that interested until I figure out what the dollar wants to do. New Zealand CAD, sharp pullback on the New Zealand CAD, but similar to the Aussie CAD, if we are making slightly higher highs and slightly higher lows, this just looks like it's in a big range. A big range that I do think is very tradable. We're probably talking about a 300 to 400 pip range on the New Zealand CAD. New Zealand Swiss, still holding long in this one. New Zealand yen, not that interested, but I'll take a look at it. Yep, not that interested. New Zealand dollar, this one turned hard like the Aussie dollar did. Dollar CAD, I'm only buying it in 2 spots. This son of a gun turned right in the middle, man. Freaking dollar CAD. I want to buy this thing in the lows like 3,200 to 1.30 or sell it at 1.40. Hopefully it's doing this. High to low and then setting up for another retracement to then sell off. I'd love to see the dollar CAD back to these lows at 132 to 131, and then I'm going to get long. In fact, this might be one of my trades. If this happens by the end of the year 2025, this might be on my big prediction list for 2025. Is getting long dollar CAD, building a 132, 131, 130 position, and then taking this long towards 138 or so. That could be a big pattern opportunity and a big range opportunity, which would be very, very profitable. Dollar Swiss, I'm still holding long dollar Swiss for right now, enjoying some positive swap. There's still a long ways to go, but even if it's range bound towards 9,200, I'd take the profit. And then dollar yen. Pullbacks are still likely on dollar yen. Pullbacks meaning this, like this is the high to low and we're getting this pullback. So if this is setting up for some type of bullish trade, there's still room to get back. I don't think it necessarily breaks the high and I don't think it breaks the low. Be prepared for the dollar yen to stay in this noisy nonsense zone for the next several months. I don't think the dollar yen is going to do anything outside of just find a way to get choppy, but maybe go up a little bit higher. So if there's any pattern here to trade, it's a swing trade off this low that gets back into the middle of this, and we have a swing high and a swing low, and you're just going to take some profit in here. Don't get beat up on this dollar yen. It's not worth it. So either don't trade it or trade it very carefully and trade it small, and don't do anything silly and over leveraged. Okay. All right. Carvana, CVNA. I had a Carvana trade during COVID. Oh my gosh, dude. This Carvana thing is freaking nuts. This is so crazy. So Carvana, I was in this during COVID, 2022. I mean, once we broke the COVID lows, I was like, all right, Carvana, I'm not that interested, but holy shnikes, man. Nothing like a 3,000% gain. Ugh. I mean, no, I'm not interested in Carvana. Are you freaking kidding me? Do I want to buy this thing at a 3,000% upside? I mean, obviously I'm not buying the lows, but I mean, again, give me something, right? So let me take a look at the fundamentals. Is this justified? Carvana became profitable this year. That's a good thing. Earning forecast to grow, trading well below estimated value. Let's take a look at the price to sales, price to earnings. Not awful. Valued at $280 with discounted cash flow model. Peer average is 21.4. Carvana's 31.2 price to earnings. So it's a little frothy on that side. O'Reilly Automotive is also a surprising one that's performing well. I don't know if this is because used car inventory has been better or more people are buying used cars, but I don't know. I want to see what the IV rank is on Carvana. Maybe there's an income play here. Carvana. Do we have earnings coming up anytime soon? Carvana has earnings October 30th. We have an IV of 38. Is it tradable? Can I trade from the 30th to the 1st to the 8th? Can I trade something at options? We have 250 spreads. We're looking at about a $32 move around the earnings report. I'll price it out. It's not a trade I'm taking right now, but if I price this out, CVNA, see what we've done. I mean, these earnings reports are knuckin' futs, man. Look at these percentages. 15%, 22%, 30%, 30%, 40%, 40%, 35%, 40%. These are insane. These are insane. These are crazy, crazy percentage movements. Now, the fact it's a $190 stock, you're trying to tell me that the average move is around 29%. Just do the math on that really quickly. So 29% on a $190 stock, you're looking at a $55 move. Okay, so even if I were to buy, current price is 190. All right, let's buy the 192.50 and then buy the 187.50. We're expecting a $55 move. Now, that's according to what options history has given us. And this is telling us that Carvana is only going to ask you to pay about $33. So in the event that we have a 20-something% move, it looks good, right? The issue is that's a lot to pay for Carvana. Okay? That's a lot to pay for Carvana. So the only way, I don't think I can justify buying this option. I really don't. Phil, yeah, you can send me an email. Are you on my Discord? Let me post my Discord channel and Telegram and stuff. Yeah, in my Discord, I have a link for if you're asking for private instruction. I've got a link to all that stuff in my Discord. So it's just its own channel. It's called Private Instruction. So you can reach out to me there. But I'll post that Discord and my Telegram before I go. So if I were to buy this and I went up, let's say I go $50 up. So if I bought $50 higher, that'd be around the 240 handle. I'd sell that. And then I go $50 lower. That's around 137. I can sell to 135. So I sell for 390. This 135 is a $52 move. If I don't get a lot of premium on the put side, unfortunately. I guess I can go there. I mean, for $26. So basically, we'd have to have Carvana move about, what, 15%? If we had a $27 move out of $190 stock, we needed to move 14%. Now, what I want to see on Carvana is right here. How many times did we at least move? I mean, this is pretty insane. It really is. Historical EVR, rise and fall of earnings volatility. It's been really, really high. Wow. Let's go to the earnings, post-earnings history. How many times do we at least hit 14%? And this is really the important thing here. So 8 days out, how many times do we hit? I'm looking for 14%. Oops, let me go back to here. I'm looking at how many times do we at least hit a 14% move. So this one doesn't. This one does. This one does. This one doesn't. This one does. 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 This one does on day 8. I'm going to cross that one off. So we have 1, 2, 3, 4, 5, 6, 7. 7 out of 10 times, we at least get a $14 or a 14% move. Now, that is pretty nuts. That really is. Now, I could take this trade. Okay. Now, that would cost me about $2,700 to buy Carvana. Now, I'm not going to do this right now because if I paid for this today, I don't know if this is going to move enough prior to earnings to actually get me in profit. Okay. This would be a trade to basically play around options, which is the earnings report is October 30th. So I don't really feel like I want to manage this for 2 days. I'd probably go out for the extra week and go from the 30th to the November 8th expiration. And if I wanted to maybe be a little bit safer, probably November 15th. I don't know. It's a gutsy play. And then the flip side of that would be if we want to turn it into a sell trade. So let's go back to the trade for a second. Go back to the 8th. And if I sold this, I'm going to sell it right at 190. If I sell the call and I sell the put, this puts me up here at 36. Now, that basically means I can't let price go beyond a $36 move. And so if I bought the 240, which is a $50 move, okay, and then I bought the 140, which is a $50 move, I can still collect $30 of income, and I need price to basically stay within a $50 move. So my max profit would be $2,800. My max risk would be $2,179. If price blows through, if price were to blow through one side or the other, I'm going to be exposed on one side of the trade for a max loss, okay, which I don't want to have, all right, because I'm going 50 wide. But I don't know. I'm going to think about this one. I'm going to think about it. A cost-effective way to play this would be just credit spreads, or debit spreads. But I don't know. Maybe what I do instead is something like this. If we're expecting a $30 to $35 move, if I were to buy, let's say $30 and then sell against that, I could get, I mean, I don't like that trade, right? It's going to cost me $4 to get a $5 profit, or it's going to cost me $3.70 to get a $5 profit. So I'm only walking away with a fraction. This one's not too bad. This is that can't be a credit. That's a credit spread. Never mind. Let me do this. If I buy the call, if I buy the 220 call, so that one's not too bad. What is happening? Oh, never mind. I got to buy this. Buy to sell. There we go. So if I buy the 220 and I sell, this would be a trade that I consider taking right here. Okay, so keep it relatively cheap. Do a debit spread. I could get $437 and only risk $60. What I needed to do was actually get up through that expected move. So more than likely, that's probably what I'll position for is high reward to risk and do an in the money debit spread and just try to go like one strike wide. I don't know how deep I want to go. Like that one right there, if I move the strikes down by $5, now I have to pay $1.55 to get $3.50 a profit. If I go here, I got to pay $1. This one's not bad. I pay $1, but the ask price is $2.35. So I don't know. This could be a wide bid mid ask as well. I don't know. I'm spending too much time on Carvana. The crazy part is the stock's up 3,000%. Good for Carvana. Long term, I mean, there still appears to be room to run. This has a fair market value of 280, so there's still room to run. 280 is not even at all-time highs, but do we have an earnings catalyst that's going to keep driving this thing higher? Yes, no, maybe. We'll find out. If I have pullbacks, I'll say this on Carvana. If we have pullbacks, I wouldn't mind looking at a credit spread at any of these pullback levels and just see if this actually continues to go up. But this stock has essentially come back from the dead to be one of the best performers. I mean, I'm surprised this isn't even on the radar. For 2024, this stock is up, 350%. How many stocks have freaking outperformed Carvana this year? I would say not very many. But anyway, I'm going to spend a little bit more time on earnings because, having these big like 30% moves when it's only a single digit stock, it's not the same as now a 30% move at a $190 stock. So, all right, I'm putting a pin in Carvana. I'm done. By the way, I do have to jump into a webinar here in about 7 minutes. So before I forget, let me post a couple of things here. So I have a free Telegram for anyone that'd like to join. I'm going to be in a webinar. Let me see what the live link is right here. Give me 1 second. So I have a link. Let's go open this link. No, let's actually copy this link and see where it takes me. And if anyone wants to come to the webinar with me at 4 p.m., you're more than welcome to. No. Okay. So this link does work. I don't want to open it. I'm just going to copy and paste it. All right. So a couple things. I'm going to post this in the chat. If you'd like to join me at 4 p.m. So this is for anybody that is not in my daily profit play. If you're interested in my daily profit play, which is a live trading session I do every day around 9 a.m. Eastern time, this is a way to check it out. So 4 p.m. webinar for my daily profit play. There's a link to jump right into the webinar. My Discord channel is right here. So let's invite, post for Discord, Chris Pulver Trading, Discord. There's my Discord link. That has links to all my education. So my trade alert service, my daily profit play, any type of chat with the markets, Forex, stocks, options, futures. When I go live on YouTube, my blog every day, private instruction, any discounts with all the softwares and trading stuff that I have, broker discounts, stuff like that. It's all on my Discord. And then in Telegram, this is my Chris Pulver Telegram right here. And I can share that link to join. Oops. Go Chris Pulver. Let's go add subscribers and copy that, and then Chris Pulver Telegram. Chris Pulver Trading Telegram. There you go. Okay. Phil, I'm not going to send my email here on this chart. If you jump in my Discord channel, that's the best way. Just post a message for me in Discord. You can go, if you join my Discord, go to the private instruction channel. It looks like this. So come into my Discord and my channels here. Go to private instruction and just post a message right in here, and then I can reach out. But I have my workshops here, private instruction, all that stuff. So that's the easiest way. I just don't want to post my email with everyone here. Okay. All right. I'm going to bounce. I got to start this webinar up in just a few minutes. So tomorrow, I am still going to be looking at Domino's Pizza, Delta Airlines, a couple of the bank stocks. We'll either do this tomorrow in session around 10:15 a.m. or I'll do this around the 3 p.m. final hour session for tomorrow. The earnings for Domino's Pizza and for Delta Airlines is Thursday, going to be aftermarket, and then Friday morning will be, I believe most of the financials will come out Friday morning before the market opens. Okay, so that was a rabbit hole on Carvana, but I'm just interested in the stock. And yeah, I obviously wish I held the lows at $20, but this thing, in 2022, after it was below the COVID low, we based briefly. I mean, it just sat there at $4 to $5 and has just ripped back in a huge way. So impressive run. Fear of missing out is certainly what grabbed me for today, but all I can do is consider what's next. Do I trade anything options wise? Can I trade earnings on it? Do we get some dips that I can trade some credit spreads? I'm not really interested in owning the shares. I'm interested in maybe generating some income. So if I like the shares enough, I can do some ratio spreads, create some income plays. So I'll take a closer look at that for today. But I'm going to go. Happy final hour session. I'll wrap it up there. And I'm going to hop into the next webinar. So if you want to join me at 4 p.m., you can. I've got the link there. That's the InvestPub link that I posted. And I'll be back at it tomorrow. All right, let's go for today. Thanks, everybody. Bye.